Welcome everyone to our weekly meetup. It's September 19th, 2021. We got a nice presentation tonight on uranium by Chris Hampton. Before we get started, a quick disclaimer, StoryTrading is not an investment advisor. That goes for any of our guest speakers as well. Investing in securities involves significant risk of loss. This presentation is being recorded. Parts of it or in whole may be posted on social media after an embargo period, typically of 3 to 7 business days. What's in a story trade? Story trading is the art of understanding market pricing through the lens of the 4 pillars of fundamentals, catalysts, sentiment, and technicals. We do that currently on WhatsApp and on Zoom, and our upcoming app will be a place to discover, collaborate, and validate market-moving information through crowdsourced research and social collaboration. You can sign up at storytrading.com for upcoming app. VIP Picks, that's where all the presentations we do here on Sunday nights are tracked as VIP Picks. We're going to be revisiting a couple of those VIP Picks. So we have a few uranium VIP Picks, so you can go look at that on our website to track the performance. So there's a little picture of uranium, Chris, I found, update on uranium and
beautiful
uranium VIP Picks. I found this chart before you get started here on URA. It's a uranium ETF, which kind of gives us a nice picture of how the uranium stocks have been flying recently. So anxious to hear more from you about what you think on that recent move. So with that, we will skip this slide and I will tell you, here we go. The VIP picks in the past, we've had 4 of them. DNN by Rob Mock, still open February 21st, up 34%. APAAF by yourself, up 12%. Yet another one, which is more like a copper play, but there's a uranium component there. I think you found it because of uranium. So minus 17%. If you'd like to update on that, that would be great. We had Paladin PALF by Florian, which did incredible, 173%. He just closed that out last week. We have other related uranium picks in the community, which have not been officially picked. We didn't have dedicated videos on them, so we're not tracking them. But a lot of people in our community are in these 2 stocks, the GLATF and FOSYF, up 127% and 231%. So with that, Chris, I'm going to turn it over to you. If you can give us an update on uranium in general, and then maybe dive into a few of these specific stocks.
Okay. As a brief review, in 2007, there was a ripping bull market in uranium. A huge number of new companies came to market, and there was oversupply. The bull market crested, and then in 2011, there was the Fukushima disaster. And this added fuel to the bear market, especially in the form of all the uranium inventory held by the Japanese. Since then, demand really hasn't changed. There hasn't been any decline in the use of nuclear energy, except in Japan. But what has happened is that all that inventory has swamped the market. The past few years, we've been down to pretty much just 2 producers, the 2 big low-cost guys, Kazatomprom and Cameco, and they're both trimming their production and saying they have no intention to restart heavier production until they see better long-term contract rates. And neither of them sound like they're ready to restart heavy production anytime soon. So that inventory has been weighing us down. Everybody has known for a while there has to be a bull market in uranium. But since the market is opaque, and especially regarding that inventory, and we just didn't know when it would start. Though every month it didn't start is 1 month closer to when it has to, because that inventory was getting eaten through. So what happened to speed this along, first of all, was uranium miners starting to buy physical uranium. That started in early 2021. And what happened just a couple weeks ago, and this is the big deal, is the Sprott Fund, which buys physical uranium and started out with $130 million shelf offering, which allows it to buy uranium off the market. Now, they've been buying uranium to the tune of about $10 million a business day, about the equivalent of what one nuclear reactor uses in a year, every day. And you've seen what that has done to the spot price. It leapt from $30 a pound to $50 in just this couple of weeks. And Sprott this week upped their shelf offering from 300 million to 1.3 billion. And of course, this has eliminated the questions about the inventory. Once the financial players are in and they've seen they can move the price, they've taken it over for now. The uranium has been financialized for the moment. And I think we could say the bull market has started.
Chris, can I interrupt you real quick? How do we track the Sprott fund? Can we do that?
SPUT or U.UN. I don't know if there's.
Yeah, that's something I've always had trouble tracking. For some reason, it doesn't show up on my E-Trade or TD Ameritrade, which is why I pulled up the URA ETF. But okay, yeah, unfortunately, I can't pull up a chart on Sprott Fund with my platforms right now.
Yeah, it has done well.
Yeah,
but the most important thing is it's buying physical uranium.
Okay.
Which has been just a huge influence on the market. Utilities use around 180 million pounds a year, and they're buying them up by the millions in handfuls. So this is changing the market, and there'll be another catalyst. Sprott still hasn't made the big jump to being listed on the New York Stock Exchange, which they'll do, and right now scheduled for first quarter 2022. That will make it even more accessible. So we've seen an explosion in prices. Bull market started. I guess I'd like to. I've already done the initial presentation on uranium. I'm hoping this can be more of a discussion. I'm happy to take any questions and hear your ideas. But for an update on some of the stocks we're looking at, QC Copper and Gold had a very interesting Friday. They were halted all day, which I'm sure anyone invested in them found just a little bit nerve-wracking. But we pretty much know this is because they're about to release their maiden resource estimate. They've been planning it for the middle of September. It's the middle of September. Be a big coincidence it was something else. And also Stephen Stewart, the CEO, had recently scheduled, right, I think on Friday, scheduled an interview with Crux investors for Wednesday. So whatever they're releasing, we hope tomorrow is something Stephen wants to talk about. Aside from that, QC hasn't really done much. The market still seems to really not know it exists. It certainly has it's not established in any way within the copper market. We hope that with the release of that MRE, that'll change. APAAF is interesting. APAAF is, well, they're a storied uranium company. The CEO, Tom Drivas, he's a smart guy. In 2006, right before the last bull market, he stepped in and he staked off a lot of the properties in the old Elliott Lake area within Canada, which was the capital of uranium mining in Canada, but really fell apart in the 80s in an earlier bear market, and when there really was that huge political and social backlash to nuclear energy. But 2006, he saw prices moving and he staked off Elliott Lake and he started advancing the uranium property there. But he saw the bear market happening, and it so happens that those properties also contain rare earths, and he switched their focus to rare earths and rebranded the company. They have discovered the second highest grade deposit in the world, and for rare earths, and they're developing that. But now that rebrand's looking a little too good, as the uranium price is no longer depressed. and is outperforming the rare earth price. APAAF does have 70 million pounds of indicated and inferred resources and another 200 conceptual, supported by historical assays. So they have a sizable uranium reserve. It's just a matter of, I don't think people are very aware of that. That'll change. APAAF has restarted their uranium development. The stock got pounded last week. Apparently, Justin Hune's newsletter, Uranium Insider, issued a sell on it, saying they wanted to focus on companies that were focused on uranium. So again, that rare earth rebranding not looking too good, but it's a buying opportunity for APAAF. You know, when other people are selling en masse, walk in there and buy. It's still, I mean, that's a huge uranium deposit, and it's just not being given much value. I think most of the movement in value in APAAF right now is from the rare earths. As for Global Atomic and FOSYF, those are still two of my favorites. Hold them. They're beautiful uranium companies that should move with the market, with the uranium market, and with the price of spot. There's nothing too tricky about them. Unlike QC or APAAF. Another one that I've talked about quite a bit, Azarga. Encore Energy announced that they are acquiring Azarga 2 weeks ago. A pretty good deal for Azarga stockholders. There are a couple interesting things about this. One, okay, Azarga stockholders get 0.375 shares of Encore Energy. Of course, Encore has been one of the big runners so far in this uranium bull. I think they're up close to 50 times at this point. So I don't know. They're not a bad bet. I'd rather ride the bull with Azarga, but it's not an option anymore. So anyways, Azarga shareholders get 0.375 shares of Encore Energy. Right now, Azarga is trading at about a 10% discount to where the price should be for that exchange. Also, if Encore trades down, and thanks to Papa Sweat for working this out exactly, trades down below $1.40, Azarga shareholders start getting larger and larger amounts of shares, up to about half a share per Azarga share. So holding Azarga right now looks pretty good through the acquisition. That 10% gap will probably close, and you're a little hedged against downside in the market. Also, I mean, what will happen? Sometimes acquisitions don't close, and that's why the acquiree trades at a discount. I mean, what could happen here? I mean, of course, it would be bad if something awful was discovered about Azarga. That's always a risk with investments. More likely, Azarga shareholders will vote down the acquisition. If that happens, will that be bad for Azarga's share price? I don't think so. I think if anything, the attempted at that point acquisition will have shown the market how much value there is in Azarga. So I like holding Azarga. I'm going to hold it as long as I can. Then Peninsula. That's a interesting one, though I'm more interested in it at below 12 cents than above 20 cents. It's not as leveraged to the price of uranium as most of these other juniors. And I think that's a review of pretty much the ones we talk about.
All right, so we got a couple new names here, Peninsula and Azarga. I'm actually gonna put this in the presentation so we can come back to it in the future and follow up on that. So it's, let me just put that in here. Peninsula, gotta follow up on those ticker symbols, and Azarga. So what I wanna ask you, Chris, yeah, I can look at that screen. We have a whole bunch of tickers here. You know, maybe I haven't been personally too involved in the uranium research groups, I may have missed the conversation on Peninsula and Azarga, but now we have 4, 5, 6, 7, 8 different tickers here, right?
Right.
Um,
DNN we missed.
what's that?
We missed discussion of Denison.
Oh,
We can do that.
yeah. Why don't you tell us about Denison real quick?
Oh, I think I've mentioned this to you that I'm just not a big fan of Denison. Again, as a low-cost producer, it doesn't have the leverage to the price of uranium that I like to have in the uranium equities I buy. I'm not particularly keen on producers. You know, miners are special. Maybe there's nowhere else except, when there's serious intellectual capital involved, that value can be created like they can be created in miners. A couple guys with, $100,000 can walk out, stake some ground, and they can find $1 billion gold deposit. And they've created $1 billion in value. And then that value gets pushed forward as they develop the property and bring it close to production. But when you actually get to production, you're not creating value anymore. You're monetizing the value you created and you're depleting your resource. I don't see producers as good investments. Of course, every miner is a good investment during a bull market, but producers are the worst choice. They're the only choice if you're in a bear market or any other time, and there's no reason to invest in miners.
So here's the let me back up. I think the $1 million question is how do we assess if these moves in pretty much almost all the uranium stocks has already taken into account basically based on sentiment and things like that. It's
right.
Forward looking, right?
Yes.
And it when does it take into account the future good fundamentals of uranium? How do we know if that's happened yet?
I mean, you can pretty much rough out the uranium price that's getting built into these miners at any particular point. Considering the spot was up at $50 just a few days ago, they're not that far ahead of it. I think some of the more expensive ones, Paladin, UEC, got up, building in, $70 uranium maybe, but most are still, lower than that. And as for a target for the bull market, a lot of people talk about $65 or $70 uranium being a level where there will be enough production to meet demand. So that might be where prices stabilize sometime in the future. But bull markets, what happens in a bull market is prices don't rocket up from their bear market lows and then just zip up the fair value, stop there and stabilize. There's going to be a lot more happening in this bull. It's going to be a long time before supply can come to market to meet the demands that almost certainly is coming to market now.
So, okay. So now let me go back to the question I was trying to ask you.
Okay.
Maybe you can give us two answers, right? If someone wanted to play this, what is a safe way, right? Maybe not the highest return, but just a safe way to capture the bull market in uranium. What stock would you recommend someone buy for that? And then out of all these other picks, which are smaller companies, more speculative, what's your favorite one out of the speculative ones?
I'd say if you just want to focus on investing in the uranium bull, the best ETF is URNM.
URNM.
It's got the best makeup, preferable to URA. I mean, what is risk balanced against reward? I mean, if you want to just go low risk, invest in the Sprott fund, invest in physical. But the returns on that are going to be much lower than you get in the miners, which are leveraged ways to play physical uranium.
Right. Okay. So if you want to go the more conservative route, you would go ETF, either
Yeah.
URNM or URA, but you like URNM better.
Yes.
And to get some leverage, you want to go with the one of these miners.
Well, URNM has the leverage, but the Sprott fund doesn't.
Okay, but does URA have the leverage too?
It's got a strange assortment of companies. It's got some gold miners in it. So it's like a corrupted uranium fund.
Okay, so we'll have to do some research on that to see what the portfolio holdings are for URNM versus URA. Okay, great. So with that, before we open it up for questions, I'm wondering, since QCCUF is your VIP pick, I know you mentioned there's a halt, but what are you expecting in terms of the news, which I guess we'll get tomorrow? And if it's what you expect, how do you think the price will react? And kind of what's your target for QCCUF?
QCCUF, I mean, it's an interesting case. Management knows exactly what's in the ground for a large part of it. They have decades of old drilling records from when the mines were run by Falconbridge in the 60s, 70s, and 80s. But none of that is publishable. Everything's changed since then. You guys might have heard of BRIEX, that spectacular mining fraud that happened 20 or so years ago. Since then, well, after BRIEX, Canada instituted this process miners have to go through to release information. And none of those old drilling assays fulfill those requirements. So management knows what's in there, but they can't tell us. They have to go and re-drill and release results in proper publishable form. So tomorrow, it's certainly going to be more than 100 million pounds of copper. And it's probably just going to focus on the tonnage. And I guess let's leave it there. I mean, I wouldn't be surprised if it's over 1 billion. But then a couple months after that, they'll start getting into the preliminary economic analysis, where they'll tell the market how much all this is actually worth. So with Monday, I expect, this number, they're going to give us a big number, but it's going to involve what looks like a lot of inferred data. Then over time, they release more releases, more analyses, and this picture starts to get more definite. Even though people that pay attention can figure out what's going on much earlier. I just don't think many people are looking. So tomorrow should be a big day, but it's going to be a long ride, much higher.
All right, great. Let's open it up to some questions. I want to remind everyone we have a uranium research group. Since there's so many of these names, we don't have a separate room for each one of them, except maybe QCCUF may have one, or DNN, I don't remember, but most of these are covered under one uranium research group. You can find that link in the VIP investing room. So our first question comes from Tom on VIMW. Are you familiar with what that is?
Yeah. The Australian miner.
VIMY, I'm sorry. Vimy.
Little Vimy.
Yeah. What are your thoughts on that? I don't get a chart. I don't know.
Oh, thoughts on Vimy. That's the question.
Yeah, that's the question. Thoughts on Vimy.
I don't like Australia as a jurisdiction. I mean, Australia has no nuclear industry. They have 0% of their power is supplied by nuclear. I don't really know Australian politics that well, but it seems like they're pretty negative on nuclear power. They do have a little bit of mining going on, but I think just 3 mines, even though they have some of the largest reserves in the world underground. So you've got miners there that are finding uranium, but it just seems high risk to me to invest with them through the permitting process through to production. A lot could go wrong. Probably will.
Yeah, and I was able to pull up the chart on Vimy on
Yeah.
Yahoo Finance there. You can see that.
And also Australia, it's wild. Their reporting isn't quite as fastidious as ours. It's I'm not entirely comfortable with it as a place to invest.
Oh, wow. Look at that move on VMRF. That's the US ticker
Yeah.
on Vimy.
Not that, I mean,
Quite a
the
move.
ASX stocks have been some of the best performing so far in this uranium bull, but I won't be riding them.
Okay. Cool. Any other questions? You can raise your hand or you can throw it in chat. Okay. I'm not missing anything. All right, so I'll ask a couple questions. So we did a couple presentations with yourself and Rob Mock. I know you said you don't like, there's a few more questions coming in, but I wanted to go back to Denison for a bit because there was a lot of, it grabbed our attention because of huge call option activity. And this happened shortly after what happened with GameStop, where there were these like gamma squeezes.
Right.
So, there was some speculation in our community about DNN being targeted for a gamma squeeze
I think it happened.
the Reddit community. You
And
think it already happened?
Well, I mean, that's what happened back in February. It was just a brief one.
Right.
And we had, I think the implied volatility got up past 300 or 400.
So any continued interest for you at all in terms of, I mean, it looks like almost kind of a nice chart. I see like a W pattern here. It seems to be the most recognizable name on social media.
It is. And maybe if someone wanted to take a lower risk, lower return, stab at individual uranium stocks, Denison might be it. But it's a low cost producer. It does not have the leverage of a high cost junior.
Okay. Yeah, I still have a position from back in the day when we were excited about gamma squeeze. So that may be something to monitor is the social media footprint, especially on Reddit and the options activity. All right, now we got a couple other questions coming in. Okay. Let's see, from Joshua.
So AP, the best among laggers. APAAF and QC, I see them as outside the main body uranium stocks. First of all, both of them are multi-resource. They are outside. But they're also different in that they really have hidden value. So I think, yes, they're both great. They won't necessarily travel with the rest of the uranium market. API will a little more so than QC. I just think they're great investments that the uranium bull will help propel.
Okay,
Both
we got a
huge winners.
Thank you. We got a question from Matt. He says Olympic Dam in Australia, part of BHP, is one of the largest uranium mines in the world. Very stable jurisdiction with long history of uranium mining.
I won't argue with you. I mean, Olympic Dam's going. But the fact is, there's still only a couple mines, and will a little guy like Vimy be able to get a mine into production? I can't answer that question, and that's why I'm not investing in it.
Okay, and that's BHP as a ticker symbol, and that's $144 billion market cap company. So maybe the potential there for something safer. So something to possibly look into. All right. Joey Fry says, where do you see spot prices peaking, and what would that likely imply for the appreciation of highly leveraged miners?
I think we're going over 100. Beyond that, we just have to see what happens. For juniors, we've got a ways to go. I think we've started the bull market proper. With the launch of the Sprott Fund, we started the main wave of this bull. I think it might happen faster than we think. And I'd suggest we all be very wary of FOMO, be careful about what we buy, and keep our exits in mind, because this all could happen very fast.
Yeah, and that relates to the next comment here. What do you think of the current investor sentiment? And I think, like you said, you got to be careful. Almost every chart we've pulled up has had crazy moves. It's actually one of the reasons I like APAAF and QC, because they haven't had those crazy moves yet, you know? So,
Right.
you know.
Yeah, I think APAAF is really viable here.
Yeah, and you know, I think it's almost inevitable. Like when you go through these kind of trends, where it captures the attention of you know, the traders and social media and the Reddit and Twitter crowd, it's almost inevitable that every stock has its turn. That's what I've noticed in the past. So, you know, those two haven't moved a lot yet, so I'm pretty excited about that. But you got to be careful. That was the point you made, Chris. There's probably a lot of low quality names out there. You know, the crowd and social media on Twitter and Reddit may go and push certain stocks, and they may jump. And, you know, if you get in at the wrong time, you can get really hurt, because some of them are probably very low quality and will crash right back down pretty quickly. So something to be aware of.
In my experience, and I'm very open to discussion on this, but it's my experience that in cycles like this, the beginning of the bull, everything rises. The bathtub pushes everything up. But the bull gets choosier as it moves forward. And sometimes it'll be surprised by the names that fall behind. So we have to pay attention to the narrative as it evolves and what's going on in the market, what's getting rallied and what's getting killed.
Yeah, I think you're right about that. We saw the same dynamic with COVID stocks in the first few months. Every COVID stock flew, and then as things matured and people calmed down, he saw separation between the higher quality names and the lower quality names.
Yes.
And with the higher quality names, when you get into these cycles, they could run for a long time, right?
Yeah. Investor sentiment? I think it's bipolar. We just had a one down day, and it's freaking out. I think we're starting to see traders proper enter the uranium market. And
I think so.
Yeah,
I think so. That's what it feels like.
Yeah, yeah. And so I think that means volatility, buying opportunities and selling opportunities.
Hey, I like volatility. That signals to me maybe opportunities to sell some options, and in a stock like DNN.
Like that's the best thing about DNN, the options.
Yeah.
And the unfortunate thing about most of these stocks, none of them, no options.
Right. Right. So DNN has options, and it's a highly liquid, deep options market.
Right.
So yeah, I'm getting much more into options selling of recent. So, you know, maybe looking into that with DNN.
Yeah. And the peak in a few months or much longer. 3 weeks ago, I would have said maybe late 2022, you know, a nice long bull. The peak could be in 3 weeks. I just don't know. We have to see what happens. This is moving so fast. I mean, no, that's not true. The uranium bull isn't a bull market in stocks, it's a bull market in uranium. And there are supply issues that need to be addressed before this bull market can end. So that's where we need to look for the end of the bull. Watch uranium, watch what's going on in the industry.
Okay, great. Any other final thoughts on any stocks? What are we doing with QC? That's what I want to know. I've been in QC with you since your presentation. I've been holding it for a long time.
You're not going to regret it. I'd be very surprised.
I think what I'm gonna, because it's hard for me. I'm not a mining expert. We brought in, we spoke to the CEO. We had like a geologist that's on YouTube. I think we had a geologist on the call, asking some questions of the CEO, and I'm not going to know what to make of these press releases, honestly. So is like that first big pop we get on QC, is that the selling opportunity? Do you maybe plan on taking some off the table every time there's a pop, or are you going to kind of diamond hand this until, a much higher level?
So far with QC, all we've done is talk about their Springer Perry properties, which look like they could potentially be major copper producers in Canada, but they also have Cook and Robitel properties, which, I've barely looked at their value, but there's value there. Then they own 30% of baseload. This is
right. There's very limited downside. That's what I liked about QC.
Yeah.
Doesn't look like there's a lot of downside there.
There's just, where can you wring out value at this point? There's just barely anything there in that stock.
Right. It's like an option.
Yeah.
Yeah.
Except without much of an expiration date.
Right. Yeah, that's what I liked about it. So, all right, very good. Thank you, Chris, for that update. I just want to remind people again, Uranium Research Group, you can collaborate on with Chris over there on the stocks. VIP events, you go to our website, click on VIP events, you can see what events we have coming up. Please follow us on YouTube and on Twitter. We got youtube.com/StoryTrading. Got a nice, easy URL to remember. So check it out there. We put all our videos up on that. So with that, we're going to end our recording and move into Trade of the Week.